The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick off Tuesday morning, and we got some red action across the board right now. Some weak Chinese data out there. We got markets in negative territory, challenging the lows of the close of last Friday. Had to recalibrate things. We trade higher yesterday, quite the sell-off on Friday, of course, down to lows of just below 4,500, and we just tested that area. You have a low of Friday at 44.93, and the S&Ps, and we just got down to 44.95, so we're just above that level. But boy, you look at the action from last night, right? It's a one-way trip to the tune of about 1% in the S&Ps. We've caught a little bit of a bid, but you're talking about trading down about 45 points on an index trading at about 4,500. S&P is off 0.8% right now. We got the NASDAQ off 0.8% as well. NASDAQ, a little bit of a different story yesterday in terms of the price action. You had the Dow leading the way. NASDAQ just got below the lows of yesterday and the lows of Friday. We're right at those levels right now. You got the Dow, as I mentioned, a little bit of a different story. Dow, not quite down at those levels, but you're within about 100 points right now. And you're talking about, well, 160, I guess, but you're talking about an index that just traded down 300 plus points from the close of last night. Technically, we're down 272 in the Dow, and the Russell leading the way, off 1.3%. Banks getting fined today. You get some banks getting downgraded as well, putting some pressure to the downside on the Russell. The Russell, talk about a laggard, right? Trading right now down 25 points, off 1.25%. Crude, continuing the pullback. Still above $80, but we just tested and got a 79 handle in the last hour. We're trading at 80.61. We got some China weakness out there. That's going to put some demand weakness potentially in the crude market. Gold off $10, challenging that spike low of Friday on the jobs number. Gold trading at $19.59.90 right now. You're down by $10 on the session. We take a look at that daily on gold. Well off of where it was of 2012, just about a couple weeks ago, but kind of in no man's land, right? 1960. We've been higher, we've been lower. Gold continuing to trade with a little bit of weakness this morning. You got to jump over to the dollar when you see that type of action. We have dollar strength going on right now, 102.65. You see the acceleration from the close yesterday, actually above where we were on Friday now on the dollar index, and we got to jump to yields. We're getting higher price and lower yield today. Interesting when you look at, right? So we just did the dollar. We are getting higher price, and we are getting lower yield. We're up by 12 ticks. You're above where you were on Friday. But at the same time, we are basically just back to where we were on that jobs number. And so we've continued to climb. Even though we have higher price and lower yield, we have dollar strength, which is an interesting divergence from some of the relationships that we've been seeing play out in this market. But boy, we got a lot going on. We'll jump over to the VIX as we wrap up our jump around to different markets this morning, with the VIX trading above 17 again, 17.03. So much for the days of 12, right? So much for the days of 14. We sat there for about 2 months, all of June, all of July, maybe everybody going back to school in August, in Florida at least, getting people back in the market. I kid. I mean, we get some economic data here. We get some earnings data. We get CPI data about 48 hours from right now on Thursday morning. That will play into things as well. But let's jump over to some China data to kick things off. So we got a couple articles here. We actually got 3 articles up, don't we? Yeah, we'll start off with this one. China's trade plunges more than forecast. Exports dropped 14.5% year over year in July, the worst decline since COVID hit. Remember, February 2020, COVID was hitting China ahead of us, right? March is really where we started to accelerate. The end of February is where we started to decelerate. China was dealing with that coming into even December, January, February, in that as it began. Imports fall 12.4%, much deeper than economists expected. That's the article we have up here for exports and imports from the journal. Same headline, same information, different headline. Chinese exports fall at the steepest pace since February 2020. That's the point they choose on their headline. A slide in outbound shipments reflects fraying trade ties with the Western world, even as exports to Russia boom. So really weak numbers here coming from China. And check out the trend. Exports fall again in July. Imports drop more than expected. You have exports in black. You have imports in red. And you talk about some year-over-year deceleration, man. Now, this doesn't go back that far. Okay, you're not even getting back prior to COVID. But yeah, we're at some negative numbers across the board here, year-over-year decelerating. Economic recovery this year was expected to be buoyed by strong domestic demand, but they have some issues going on. So that one's shaking China a little bit. You got the Hang Seng down 1.8% right now. Shanghai down 0.25%. Nikkei barely in the positive right now. You jump over to Europe, you get the DAX right now down 1.25%. You get the FTSE down about 0.6%. CAC roll down a full percent as well. We jump to bonds. That 10-year yield was sitting right at 4% right now. So we've had a little bit of volatility, right? We're right back to where we were basically coming into August. We got that spike low, but we're still sitting at 4%, 4.02 almost actually on the 10-year as we're up 10 ticks on the session right now. All right, jumping around to what else we have going on. Going to be an interesting open to see how we trade with this Chinese data. The Chinese central bank on Tuesday set the yuan fixing at the weakest level in almost a month, a move that signaled some tolerance of softness in the currency and which triggered yuan sell-offs in the foreign exchange markets, allowing some fluctuation in the yuan's value should benefit the economy. They're trying over there, man, but they got demand woes, as they put it. South Korea, Japan, Taiwan, South Africa, and Canada dropped by double-digit rates for China's falling demand. That indicates subdued appetite for electronic products and minerals. Yeah, imports from the U.S. fell more than 11%, while those from the EU were down 3%. Really weak numbers, man, across the board. I mentioned the banks. U.S. bank shares drop after Moody's cut ratings, warns on risks. Rating company downgrades 10 lenders, citing dimmer outlook. U.S. Bancorp, BNY Mellon, among 6 firms facing potential cuts. There's your cuts when you look at the numbers there. Pinnacle Financial downgrades. No huge notable names. When you get into the review for downgrades, right, that's where you get some companies that we really know. Truist is a big one. I see them everywhere. State Street, Northern Trust, U.S. Bancorp, Bank of New York Mellon. A lot more notable names in the review segue. Maybe that's like a heads up so they don't shock the market when they come with the downgrade for them. Shares declined for firms that had their ratings cut. 3%, 1%, 2%, 2%. Moody's adopted a negative outlook for 11 lenders. PNC, Capital One Financial, Citizens. Listen, the pressure is going to be on these banks for a while, man. So you're seeing this weigh on the Russell, which is why the Russell's getting hurt more than the other indices today. You got the Russell right now down 1.25%, S&P's 0.75%, NASDAQ 0.75%, and Dow actually identical. They're all down about 0.7%. Meanwhile, you got the Russell off about 1.3%. Yeah, there's PNC. So check it out. PNC, $6 gets shaved. They're going right back to 126 on the open. Yeah, be careful in these regional banks. What's the one? Is it KBB? KBX? What's the regional bank? Yeah, be careful in those regional banks, man. And the silver lining there, though, is that as consumers, those CD rates are going to stay decent. I don't know where they're going to be. The Fed is going to determine that to some degree, man, but they are going to be fighting for capital for some time, and they're going to have to be paying some yield for that. Stay tuned, folks. We're coming back. Lots to talk about. We'll be back in 3 minutes. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps clawing back some of those losses, down by 29 points now. That's about 2/3%. NASDAQ down pretty similar, 2/3. Dow off 2/3. You have the Dow, NASDAQ, and S&P trading right in confluence with each other in terms of step-by-step percentage-wise. Not usually the case in the Russell, taking it hard, and that having to do with banks this morning, and they're getting kind of a double dose. So you got Moody's, right? We just went over this one. Moody's cuts the ratings of 10 companies. They review for downgrade on 6, and they have negative outlooks on many that follow there. And so those banks are trading lower. That's the main reason, we'll say, why the banks are getting hit this morning. But another story out there that would be getting more press if it wasn't for everything going on, and we're talking about pennies for what these banks have to pay, folks, but Wall Street's going to pay hundreds of millions more in WhatsApp cases, basically because, folks, banks are highly regulated, okay? Regulators say the probe discovered off-channel communication. Shocking, right? Yeah, basically they were communicating using apps like WhatsApp, Signal, not saving those communications and discussing business. The biggest fines out there, Wells Fargo, usually at the top of the fine list. I kid a little bit, but not really, right? Wells Fargo, $125 million. BNP, $35 million. Like I say, pennies on what these companies do. Meanwhile, the two lenders will pay $75 million each over similar violations by their derivative brokerage units. In all, the CFTC announced penalties of $260 million, while the SEC said the firms had agreed to pay $289 million. Cracking down on firms skirting regulatory scrutiny by using services such as WhatsApp or personal email addresses for work-related communications. So they're not telling people not to discuss things or communicate outside of the communications that they store, but they were discussing work-related issues outside of where the regulators can see those communications. And when you're in that industry, folks, that's not allowed. It's not even legal, is a way to put it. Regulators have said that failing to properly archive messages can make it harder to investigate wrongdoing. You think the people who were using those apps know that? Pretty remarkable what you could probably get away with these days in terms of communication not being saved. Even more remarkable to think what you could get away with before everything got saved on the phones. How often is it, right, that there's a text out there or something? Okay, so that story out there, not a huge one, but out there nonetheless. Yeah, let's talk about this story. Interesting one out here from Bloomberg talking about cars, right? I've talked about myself. I have a small coupe right now, and thinking of getting a bigger vehicle. And cars in America, they've been getting bigger, and they just keep getting bigger. The average new vehicle in the U.S. has gained 175 pounds in just the past 3 years. Some of this because of EVs coming online. Those batteries are heavy, of course, but the trend is to higher weight. This chart puts it out. From the 80s, you start, okay, American cars have a quote-unquote weight problem. You have cars in green here on the bottom, okay? The average weight in 2022, you're talking about 3,700 pounds. You back it up to 1990, you're at 3,100. 2000, you're at 3,400. The wave of vehicle bloat began in the 1980s thanks in part to new safety regulations, airbags, crash test ratings, and more robust structures packed on vehicle pounds, while better construction and stronger materials reduced engineers' need to worry about weight. Efficiency became less of a priority. Well, guess what? You have SUVs coming in there, of course. That matters. But you know what else matters in there is your emissions, okay? Then came a push for better fuel economy and emissions, a process that packed on more pounds and culminated in some of the heaviest vehicles yet, battery-powered ones. EV batteries add 1,000 to 1,500 pounds for a long-range sedan, okay? But what happens is you pack on those pounds, and you're probably decreasing your emissions. Now, it's interesting when you look at the weight these companies have added. This goes company by company. Kia started at the smallest, and they're actually still the smallest, right? In terms of weight, small vehicles. Hyundai, Mazda up there. You got Stellantis at the top. Ford, they got some big vehicles, right? That big Explorer maybe. Ford making a lot of SUVs. Now, what's interesting as well, fuel efficiency. Now, what's crazy here is that this is only from 2000 to 2022, okay? But sometimes time flies, and it's important to see these changes that have taken place, man. I mean, you're talking about a fleet of vehicles that was usually getting between 18 and 24, right? And now what are we pushing? We're pushing 22 to maybe 28 or 30 miles per gallon. And you see some of the huge improvements some of those companies, the smaller weight companies, most of all, have made. Hyundai, Kia, Honda, the same three when you talk about the weight at the top there. But nonetheless, radical changes. But that was interesting, man. Cars are getting bigger. Shouldn't be surprising there. And I think that's just going to keep happening, man. Because people like big cars. You always have a nice little, fun little car, which is kind of what I have. But then you got a family, you got things to do, and as efficiency takes off, I imagine that will be something that plays out as well. Yeah, I mean, we could talk China as well. This one out here from the New York Times talking about China's college graduates. They're struggling, man. It's just interesting. This is a Times article. More big picture here, right? But I was reading this morning as well. Don't be so picky about a job. China's college graduates are told under pressure from Beijing. Chinese schools have been told to do more to secure jobs for students who are facing bleak prospects. So just keep China on your radar, man. You can check that one out on the Times if you want a little bit of a longer read. But yeah, basically not exactly emblematic of a very strong economy out there. You must not aim too high or be picky about work, said one college president to more than 9,000 graduates in June. The opportunities are fleeting. Imagine if we had college presidents talking like that to people graduating last year. Not exactly China, thank goodness, but yeah, to say the least. All right, let's jump around and see what we got on some of these FANG stocks as we kick off the day with negative action. You got Amazon shares. Quite a run last week on their numbers. This morning, we're going to drop a bit to 140.73, just the middle of the acceleration they had yesterday. We jump over to the big dog, Apple. Yeah, keep your eye on Apple, man. I mean, Apple has led this market higher, and they could lead this market lower in a heartbeat, man. We are $20 off of where this thing spiked at a high. Apple just gave off $320 billion in market cap. Pretty remarkable that one company can shave $1/3 of $1 trillion in market cap of wealth off people's balance sheets in the span of about 2 weeks, and nobody's even really talking about it. Well, it's been a heck of a run, man. You want to see something? As we wrap it up and we come into the opening bell in 4.5 minutes from right now, folks. You're still $8 away from a 382, man. And look at this. Yeah, it's coming right back into this area. So we are now back to the highs of last March, the highs of August, which is a high of 176.15, and actually the recent all-time highs of a price point of about 182.94. So you're through that area, But boy, you want a little linear regression, okay? You want to pick an area that has support. Well, what? You're in 170 to 180, man. 170 to 180 is your area of support. 170 is the 382. That's going to be an important area for Apple. You got $8 to that area, but keep your eye on Apple shares, man. You get down to 170 because you break below that, right? Number one, you've broken through the 382. And number two, you break below that. And you're now in this huge area that got us to 130 in a heartbeat. Look how many times we did this. Absolutely remarkable, the volatility Apple has had. Hindsight 2020, man. But don't think we can't do it again, folks. We did 170 to 130. Then we got to 176. Yeah, we did 180 to 130. Then 176 to almost 130. Then 155 to 129. And now we're going to 198. Interesting action. Stay tuned, folks. We're coming back for an interesting open. Don't go away. I'll be back in 3 minutes.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got an S&P right now down 27 points. We put it back to a short-term time frame chart, bouncing off the lows of about 44.95, we'll call it, last night. 8 a.m. this morning. And we're bouncing a bit, 45.10 right now in the S&Ps. NASDAQ 100 off 120. The Dow off 226 right now. The Russell off 27, as I mentioned, those banks weighing. Let's check out how some of the big banks are doing. Wells Fargo off 2.3%. They're paying nine figures, and it's pennies on the dollar, right? That says something, but it is. Wells Fargo off 2.3% right now. We jump around to some of the bigger banks, even Bank of America off 2%. Anytime you got like 10 banks getting downgraded, right? You saw what was going on there in Moody's. JP Morgan off 1.5% right now. Citi off by 2%, let alone some of the other banks that took it harder. PNC off by 3.5% right now. What was it? All right. Yeah, banks taking it on the chin this morning, and you got the Russell right now continuing to trade lower. They're dropping on the open with the Russell off 1.6%. We jump over to the VIX this morning, volatility index 1684. And yeah. Yeah, it's interesting. All right, we won't get in. They're talking about the United Auto Workers in the den. And yeah, why not? Let's pull it over. So this is the article even, right? I mean, it's one of 32-hour work week, double-digit wage increases. So that's the line that started it, S1. So I'm sure you're reading either this story or a story of it or a story that came off of it, right? And here's what I'll say, okay? Question everything, folks, okay? And that's you know, this of course becomes political. And Duncan, Steve, you said it well, man. Unions are great in many situations, but not every one. Well said, man. The truth always lies like somewhere in between of everything, folks. Politics used to be the art of compromise because nobody's going to agree on everything, and that has kind of gone to the wayside. And I think a lot of people would agree on compromise to some degree. And I find myself even looking at this, right? So you got a huge deal going on between the United Auto Workers and the big three automakers, man. And you just saw that huge deal that got done with UPS, right? UPS workers, drivers making, I think, near about $50 an hour. Good for them, okay? The problem, in my opinion, is that we have a 3.5% unemployment rate right now, right? But unfortunately, many jobs don't provide a livable wage to raise a family for, even though the companies they're working for are achieving record profits. And who said we have to work a 40-hour work week? Okay? And that's where it caught my eye, okay? And there's nothing that goes into this in terms of worth that work ethic. And I forget where it is, and whoever said it, it says there was the word lazy in the den, right? Talking about lazy. And I can't find it, but it was in there. And it's a common perception, okay? And here's where I'm going to push back a little bit. There is nothing lazy about fighting for what you deserve. Nothing, okay? Who says that we should work 40-hour work weeks? Why is that the deal? Why do we work 5 out of 7 days? Why don't we work 4 out of 7? Why? If 5 out of 7 is so important, why aren't we working 6 out of 7 and resting on Sunday? These are common misperceptions that we take for granted, and you should question that. Because why? Who decided Monday through Friday was like the grunt job, okay? As in you're there, you're 5 days a week. We've seen the shift during COVID. And I totally agree. Majority work more than 40 hours. And here's the deal, man, okay? You should be working all the time. As in, you know, you shouldn't be working all the time, but I say there's not really retirement. You should work at what you enjoy, hopefully, and even if, let's say, you work a hard job for 20 years, you make enough to retire, then what are you going to do? Go have some fun. Go be a real estate investor. Go get into art. Go take piano lessons. Go do whatever you want, right? But still be active in doing something, and maybe you can turn that something into some type of getting paid for the value you're providing or something like that, okay? But I bring it up because, you know, and I was just like, how much are these nobody ever said, why? How much are these car makers making, man? How much are they making with these people that they're doing, right? Well, I don't even know. Maybe somebody can help me. I'm cherry picking stats here, but I saw one stat that said between GM, Ford, and Stellantis made a combined profits of $22.5 billion over the first 6 months of this year. Why would your workers be lazy if they don't want to work 40 hours a week when the companies are making $22.5 billion in 6 months, okay? So we're seeing a shift here in when you have workers, you have companies, you have profits, but just think about the fact that you don't have to accept the norms of what we all seem to accept. Because who says the 5-day work week is like the necessity, and if you want to work 4, you're lazy, and if you want to work 6, you're an OCD mental crazy case that doesn't relax enough, right? Where did that come from? So think about that, because this is going to be a heck of a negotiation. You're already seeing it play out. You're seeing it play out in the press, and you're seeing it play out with people's perspectives, and of course politics comes into it, which makes it even harder. But remember that these big three made $22.5 billion in profits in 6 months. Okay, now they're going to be spending a lot of capital to develop electric vehicles, etc. But I say, why can't we have a 4-day work week? Why can't companies that are making $22.5 billion support it? I don't know if they can, but it's certainly not lazy, and they definitely deserve the recognition because the companies seem to be doing just fine, man. Okay. This one's going to be a tough one for these companies when this plays out, man. Yeah, you got members' demands over there, and this follows that UPS deal. It's going to give these workers, man, some strong teeth to dig into their position. And yeah, this one brings it up as well. Look at, there it is. I didn't even get through the article. $20.7 billion they cite. So I had 22.5 in the first half of this year. Whew. Yeah. So it would take 16 years for somebody who gets hired at their battery plant in Ohio to make as much as the CEO makes in a week. It's not how it used to be, man. And everybody likes to get up in arms about, people needing assistance, too much government aid. Where is all the uproar? And I'm deviating here as the market trails off a bit. Okay, but these things are going to play out. We're going to see them. Where is all the uproar that we allow these companies to privatize these profits, and then when it comes time to actually supporting the employees that they're paying to facilitate these profits, that responsibility is shifted off to the government? That is what is happening. It happens with Walmart. Yeah, for what it's worth. $22.5 billion they made in 6 months, folks. Keep that in mind when you see those workers saying, hey, maybe we don't have to work so hard 40 hours a week. Why can't it be 32, man? Why can't it? Yeah, everyone's going to talk about what? Oh, productivity will drop, okay? They said the same exact thing from working from home, folks, right? Same exact thing, working from home. Remember that. That's a lesson, right? People, they got to be in the office. CEOs still want it. And in some positions, man, it makes sense. In some companies, it makes sense. I get it. In private companies, you're allowed to do what you want to do. But just remember what happened when everybody went home and still worked. Companies were able to succeed even more so than prior sometimes. Stay tuned, folks. We'll come back, talk equities.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the markets in negative territory pretty much where we kick things off. The Russell catches an acceleration off 1 2/3% as we get some bank woes that continue, trading at 1934 off 33 points from yesterday's close. We jump around to what else we have going on. Let's talk a little bit of Fed. Philadelphia. Good old Philadelphia. Went to school at Villanova, right outside good old Philadelphia. Spent some good time out there. Saw the NBA All-Star game my senior year at Villanova when I was working for a nice distributorship for good old Budweiser in Philadelphia. I got to go to the All-Star game for free. Last All-Star game that Michael Jordan ever played in. I think that's the only time I got to see him play. I digress, right? Haven't been back in a while. Good old Philly. Always like Boston more, but I'm a little biased. Federal Reserve Bank of Philadelphia President Patrick Harker said the U.S. Central Bank may be able to cease interest rate increases, barring any surprises in the economy, though rates would need to stay at their current elevated levels for some time. Absent any alarming new data between now and mid-September, I believe we may be at a point where we can be patient and hold rates steady and let the monetary policy actions we have taken do their work. Those are remarks he said today, prepared for an event organized by the Philadelphia Business Journal. Should we be at that point where we can hold steady, we will need to be there for a while. He is a voter on this year's Monetary Policy, FOMC committee. I do not foresee any likely circumstance for an immediate easing of the policy rate. That can change quickly, okay? Just as quickly as it can change to where we don't need to hike. I mean, for some context here, you don't have to go back more than 5 months to March 7th on this chart, folks. You see that on the candlestick chart? We're referencing candlesticks because we're going to talk about our man Teddy Kegstad next. We talk to him Wednesdays at 40 past the hour, but he's got a webinar coming up in 6 days talking candles. You see that candle on March 7th? Let me zoom in on it. There's your candle on March 7th. You know what that was? That was Chairman Powell in front of Congress. Okay, it was a 2-day testimony. March 7th was the first day when he surprised the market, and they were talking about something to the degree of we're going to have to be higher for longer than people are anticipating, right? Market sells off a good 50, 60 points. He basically said the same thing the next day, maybe tried to claw it back a little bit. Market wasn't buying it. We stayed at 4,000. The banking crisis began the next day, and we traded from 4,000 down to 38.50. The Monday of March 13th is when we clawed it back. Now, I give you some perspective there, okay? It sticks out like a sore thumb. I was looking for a better term, but why not? We'll go for it. Sticks out like a sore thumb because it only took a couple days, folks, and then what happened? Everything changed, okay? We still got our hikes. That might have been in there. But everything changed that quickly over the period of just a few months from this market thinking that we might go much higher. And what happened? Yeah, we went twice, okay? But now it looks like we're stuck. And it's only a period of 4 or 5 months that can change. Now, I bring that up because 4 to 5 months from right now is the beginning of the year. And think that the verbiage we're hearing right now is talking about setting the stage from pausing to where they would have to be if they need to cut. But that same thing was going on 4 months ago from when they were hiking to where they'd pause. right? So now we're already seeing a voting member of the FOMC. I'm just bringing it to your attention. I don't know how they're going to do it. I don't know where cuts are going to come from because inflation may still be a problem. Okay, he said in there if we don't get any outliers or scary data before September, we still get a lot of data. We get all of August data, let alone the numbers that we still have coming out as well. But just realize, even though they're saying we're going to have to stay there for a very long time, that can start to change if the data changes, which is what we've seen take place as well. All right, we take that, we jump around. Check it out on the front page of TFNN, folks, 6 days from right now. Our man Teddy Kegstad, we'll be talking to him tomorrow. He's doing a webinar, 60 minutes, Japanese candlestick patterns, stock and option strategies. He's going to show you how to use the candlestick patterns that he's going to talk about, use them in trades, what they do, learn how to apply those patterns to stock and option strategies in today's volatile trading environment. Teddy's written a book on candlestick charts, folks. So he is an expert. He's excited for the webinar. I was talking to him last week when we were putting this together. He launched it last Wednesday, so please check it out. It's $97. It's a 60-minute webinar. It will be archived. You can be in there asking questions. And this is not a newsletter or anything like that. Standalone product, nothing recurring, $97. It will be archived. You gain access to Teddy for an hour for that live webinar, Monday, 4 till 5 p.m. Eastern time, coming up this Monday, August 14th. And yeah, who doesn't use candlesticks these days, right? Okay, and what else do we have going on? Yeah, they're talking about Lily in the Den. Let's talk a little about, we talked about the weight of cars. We'll talk about the weight of people. Obesity drug Wegovy cuts risk of heart attack and strokes by 20%. Eli Lilly raised their outlook after strong sales of a rival drug. So this obesity drug is not made by Eli Lilly. It is made by Novo Nordisk. Okay, it's their blockbuster obesity drug Wegovy reduced the risk of heart attack and strokes. The highly anticipated study, buoying. Geez, I'm nailing that one. Buoying. I got there. My lips were stuck there. Buoying. That's a tough one. Shares of the Danish drug maker and the U.S. maker of Eli Lilly. So we'll jump over to Lilly and then we'll take a look at this because I was reading this article earlier. There's your pop, man, up 16.5%. Now, what this has to do with, okay, this thing's been on quite a run, so be careful here. There is a lot of optimism for like a holy grail obesity drug being priced into this equity right now, okay? We have so Novo Nordisk is at $413 billion. They're talking about them, I believe, right? Not Eli Lilly. Yeah, Eli Lilly's at $500 billion, man, market cap. Look at these companies. Novo Nordisk is the second highest company in Europe, just behind LVMH, right? Now, Lilly is up after the company raised the outlook on the back of stronger than expected sales, their diabetes drug. But the Wegovy trial results could fuel already frenzied demand for such drugs and broaden access for more patients. This is the key that's hitting Lilly, I think, this morning, okay? Obesity has long been linked to cardiovascular problems, okay? This study, though, that just came out for the Novo Nordisk drug Wegovy was designed to show for sure whether peeling away pounds with a shot could also have a meaningful impact on heart disease. It seems like that's an easy one, okay? And it seems like, of course, it makes sense that if you lose weight, that your chances of a heart attack will decrease. Maybe you have less buildup of plaque and fat or whatever it is. But the results make Wegovy the first drug to combine effective weight loss with reduced heart disease risk. So they could all, right? They have shown the weight loss, and now they've shown that the weight loss leads to the benefits that they've long claimed. And it makes sense, but they have to prove it in a scientific test, right? They have to have that done and show the actual results. So what that leads to now is reimbursement, because healthcare companies don't care if you lose weight if it does nothing, right? If it's just a drug that somehow reduced the weight, but the effects on your health weren't there, different story. Well, now what's going to happen? They're going to be able to go to the insurance companies and have a better argument. They plan to file for an expansion of its label in the U.S. We'll talk about this when we get back, folks. But yeah, they are expensive products, and it seems like insurance should cover them. That one gets a little bit complicated as well. Stay tuned. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets sliding a bit. You get the S&Ps right now. Let's jump back to it because we're making almost session lows. You catch a bounce off 44.90. We're trading at 44.95 right now. NASDAQ 100 dives down to 15,274. So we're off by 0.9% in the S&Ps. NASDAQ 100 off by 193. The Dow off 1% right now. NASDAQ off 1.25 and the Russell off 1.5. So watch out today, folks. And yeah, Eli Lilly, not so much, man. You're up by 16%, catches a bid to 525. We were talking about Wegovy, obesity drug, cuts risk of heart attacks and strokes by 20%. So a couple points I want to get to before we jump through the end of the program here. We got our man Basil Chapman coming up next, folks. We got live programming today. We'll talk to our man Teddy Kegstad tomorrow. Don't forget about Teddy's Candlestick webinar coming up 6 days from now on Monday. And please don't wait until the last second because that is coming up on Monday. And candlesticks, nothing like it. Well, they were only looking for 15%. That was basically what the market was expecting, or hoping, I should say. Sales of Wegovy may reach $14 billion, one analyst wrote. And yeah, it could make sense right now. Common side effects: nausea, vomiting, and uncontrollable diarrhea. Not what you want to hear, but people are still the holy grail of weight loss. It'd be interesting to see how this plays out. I'm a bit skeptical. all right? But I don't know anything, all right? If that's what the data shows, man, obesity is a tough one. The tough one that I can't wrap my head around there, right? And when you're talking about, I mean, we have listen, and I can lose 15, 20 pounds, man, but we have a diet and activity problem, okay, in America, especially. And it's very difficult to imagine there is some holy grail. When you're talking about people who are severely obese, maybe they need a Kickstarter, maybe they need something, but this is going to be a drug that many people want to take, and it's very difficult to understand how it's going to solve everyone's problem when most of us basically eat when we're not hungry, myself included, and aren't active enough. So keep that in mind when these holy grails pop up, because it's very tough for me to imagine how the holy grail exists when basically you just got to be active and you got to try and eat a little healthy. Have some splurges, but whatever it be. Folks, thanks for tuning in. Stay tuned for Basil. It's an interesting market. We're challenging the lows of Friday right now as we speak. Have a great day. We'll talk to you tomorrow, folks. Stay tuned.